Hi everyone, welcome to PGC's series Setting Up in America, where we will be discussing the challenges faced by businesses hoping to set up in the US. Today's webinar is hosted by PGC's Jeremy Wastall, and we will discuss legal, tax and accounting. We are joined by experts Jonathan Strassberg and Rob Whittall. Jeremy, over to you.
Thanks, Charles. And yeah, everyone, thanks for joining the webinar today. Really excited to kick off this series that we're going to be doing, a number of blogs, webinars and events, really about setting up in America and trying to tackle the key issues that you as a business are going to be facing. So my role here at PGC is commercial director and basically operating with UK, European businesses wanting to access the US market. The solution that we as PGC are delivering in the market is an employment offering where we become the employer for our clients' workers, manage all of the things like payroll, insurances, the compliance, day-to-day HR, benefits and payroll. And I'm joined by Jonathan Strassberg and Rob Whittall. I'll just hand over to both to do their own introductions.
My name is Jonathan Strassberg. I'm a US lawyer and an English solicitor, and I have a practice whereby I help UK and European SMEs that wish to trade with, expand to, and operate in the United States. We handle everything from incorporation, determining the correct structures, straight through to their commercial contracts and ongoing commercial affairs. In essence, I end up becoming sort of an in-house lawyer for their US concerns. And in doing so, I work with a number of other related professionals, people such as Rob, cross-border accountants, immigration lawyers, currency exchangers, bankers, payroll and health providers, to provide a full range of services to make sure that when my clients do get to America, they can hit the ground running.
Perfect, thanks.
Morning everyone, my name is Rob Whittall. I'm the managing partner of Dyke, Yaxley LLC, which is the US subsidiary of Dyke, Yaxley Limited, which is a firm based in Shrewsbury, and 100 people where we do tax work and corporate work for owner-managed businesses. And about 12 years ago, we had the idea of going to the States and looking at the States market. Investigated it for a few years and then came to the conclusion that there was a niche market practice there for an owner-managed UK planning practice that deals with owner-managed businesses. So we set up there 8 years ago, and now there's a group of us within the main practice of about 10 that day-to-day just work with owner-managed businesses going to the US.
Brilliant, thank you. So I think to kick off the webinar, just want to pose a question to you both. So based on your experience, what things do you think UK companies should do to give themselves the best chance of success in the US? Whoever first.
From my perspective, the most important thing is the quality of relationship. It's actually a non-legal answer. The quality of relationship that you have with those individuals in America who are operational for your business. When I say operational, that might be an employee, it might be a sales agent, it might be an independent contractor, it might be a distributor. But you are relying on those people to act in their best efforts for your company in a transparent manner, and hopefully for the benefit both of themselves and the company. It's really only when that relationship fails that the contracts I prepared come into play. But far and away, my clients who have good, transparent relationships of mutual benefit with people in the US who are operational fare the best.
So I think I'll sort of continue on from Jonathan's comments there. So you say, what's the give themselves the best chance? It's not, I don't think it's necessarily tax, accounting or legal, it's this fact of relationships. And Jonathan was talking to some of us about distributor relationships and employees. If in effect you get to the next level and you actually want to set up a subsidiary in the States and have a real presence there, is I think having the right staff in place is more than likely going to be the key for you being successful or not. And what I mean by the right members of staff is we, as mentioned, we work with owner-managed businesses all the time, and we sort of have to have a chat with the owner-managed business and sort of say, if you look at yourself in the mirror every day when you get up, who's made the UK business successful? And it's normally the owner of the business because they've driven it. Mm-hmm. And sometimes you find, for whatever reason, is they seem to, whatever reason, lose that focus when they go to the US because of various reasons we'll talk about. But it's so important that either it's that owner-manager who goes to the US or somebody high up, if it's a family-owned business, another member of the family, somebody they trust implicitly, or somebody high up in the managerial thing that's going there that understands it. And if we ranked all our clients between what I would say the most successful have been in the States and the least, one of the common factors we'd see on the most successful would be to send the right person from the UK to the US, the operating subsidiary.
Yeah, and I think just to add on to that, we've seen many, especially recruitment agencies and SME businesses, go to the US. The model that we have seen work pretty much every time is to identify your person that's going to take your culture and that you've got a good relationship with, that's going to the US, and they're going to replicate as best as possible what you have built in the UK in the US, and that's basically transplanting your DNA over to the US. So yeah, just moving on to this slide, I'd like to open up some questions to you both and just kind of form a discussion around your expertise. And I think a lot of the viewers will be either in the UK wanting to do business in the US, they haven't started doing that yet, or they are doing business and they haven't yet incorporated. So as a question that some people might be asking themselves, as a UK business, can I do business with US companies without having an entity or establishing a presence there? Jonathan, I guess that would go to you.
You absolutely can, and I would change the phraseology to is it wise to do that? You certainly can do that, but when you start moving beyond a minimal amount of business and trade, you then start opening yourself up to risk you might not want to take, and for which a U.S. company would address that risk. And that goes not only for legal liability, but for tax reasons. What I would say is, the more your trade, your income, and your specific marketing increase in the United States, the more your risk increases. And at some point along that process, the costs of incorporating in the United States will become worthwhile. It's fine. And also with that is the inherent risk of your business. So if all you're doing is conducting online sales of artwork, well, you might wish to have a bit more trade, a bit more income before you have the expense of incorporating. On the other hand, if you're selling medical devices, you might want to incorporate before you even have any trade. So every business and every plan is its own animal that has to be addressed specifically.
But Jonathan, I think with respect to the comments you're making there is, I think what you're trying to explain to people is that by having that legal entity in the States, you've now got another door that somebody's got to open to get back to sue you in the UK.
Absolutely.
Absolutely. Can you ring fence your liability to the US company so that your UK entity is protected and almost seen as separate?
You can, and like anything else, it's a matter of degree. So the whole point of a corporation is incorporating in the United States is that you limit your liability to whatever you've invested in that US corporation. And so long as you run the US corporation as its own entity, responsible for its own affairs, and if that corporation is owned by your UK parent company, so long as you conduct the relationship between those companies at arm's length, as though those two companies met each other in the marketplace and did what any other two companies would do. I mean by that, signing contracts with each other, written contracts, placing purchase orders, issuing invoices, having email correspondence. So long as any third party looking at those two companies could see where one company ends and the other company begins, and that they are conducted as two separate companies, then yes, you can ring fence your liability. You can limit your liability in the United States to the US company. If you start combining those two companies, if you use the US corporation to unreasonably benefit the UK company to the detriment of creditors, or if you engage in fraudulent behavior or very unlikely criminal behavior, then you start running the risk of exposing the shareholder, which is the UK parent company in most instances, to liability in the US. 99 times out of 100, that's not the case. You have to be quite irresponsible for that to happen.
But I think in that situation, Jonathan, when you're talking about that once again, is if when you structure anything in the US from a tax, accounting perspective, or legal perspective, even though that entity is most probably your subsidiary, and if it's an owner-managed business, like I imagine a lot of the clients we deal with are, from their perspective, it's, well, that's my company, this is my company, what's the problem? But anything we do from a tax, accounting, and legal perspective, we've got to get the owners of the UK business to look at that entity in the US as being completely unrelated when they're thinking of doing any contracts, any pricing or that, as if it was your company or my company they were dealing with. And if you work on that basis, you're giving yourself the best chance for the protection.
Absolutely, absolutely. And I don't want any of this conversation to scare people off of managing the relationship between the two companies to accomplish what they wish. Those two companies can work together in all manner of ways to deliver goods and services to their clients and customers in America. And there's very little impediment there, so long as it's documented in a reasonable and responsible way, and that relationship is consistent.
So can I ask, there's a few different options when someone actually decides to incorporate in the US, what type of legal structure that corporation is going to take. And I think the three that people would probably typically hear about when going through this process is an LLC, and then an Inc. And then within the Inc, you can go for a C Corp and an S Corp.
Yes.
From both of your perspective,
do you want to answer that from a legal perspective?
There are so many areas where law and tax combine. This is the first big area where they combine. If you'd like to start off there.
So generally, you rightly say you've got an LLC, you've got a C corporation, you've got an S corporation. Most probably for everybody who's on the line here, an S corporation isn't going to work, because to be an S corporation, you have to be a shareholder in an S corporation has to be a US citizen or a US resident.
Okay.
I would imagine with potentially most of the people got on here, it might be that the owner managers of the business will remain here in the UK. So really, by default, you'll end up with an LLC or a C corporation. From a tax perspective, a C corporation in the US is taxed like a limited company here in the UK, where you pay tax at the entity level. An LLC, that's where it becomes a little bit more interesting. So for US tax purposes, an LLC can be taxed as if it's a branch operation of the UK entity. It can be taxed like a partnership, or it can be taxed like a corporation.
Okay.
Where you then get into more complexities there is the UK government looks at the LLC and says, on a default, it would always be taxed as a corporation from a UK perspective, unless you specifically go to the HMRC and ask them to rule on it. So you've just got to be careful that LLC, you don't be in a situation where it's taxed as a branch or a partnership in the US and a corporation in the UK, because then you sort of got two different types of tax systems working on the same profit. So
you say it would be taxed as a limited company or taxed as a company from the UK
perspective, yes.
Does that mean the entity itself or the revenue that comes in through that entity is going to get double taxed when it goes into the US, and then if that revenue goes to the UK entity? Or what about if it stays in the US?
If it stays in the US, then you're sort of fine. Where we get into is you just get, I always believe that when you've got enough complexity going on, and in effect, if you've got a UK company that owns a US company and they're both taxed as corporations, from the majority of owner-managed businesses, owners, it makes life a little simpler to understand how everything flows, because both are sort of being taxed in the same way.
Okay.
If you've now got something that's taxed in the US for US purposes as a partnership, but for UK as a corporation, you're just adding an extra layer of complexity, which you may or may not want. And Jonathan and I, through our experience of doing this, have sort of leaned towards the fact that really, in a sense, that US entity, whether it's an LLC or a corporation, if it's owned by the UK company, be taxed as a corporation in the US.
Okay.
The two things that I would caution our viewers about. If you go to America and you go to an American lawyer who's never practiced international law, and you say, I'd like to set up a corporate an entity here, can you help me? 9 times out of 10, they will recommend an LLC. So many of the small businesses in America are LLCs because there's a tax benefit to having it. And that American lawyer would not know and could not know that when you seek to repatriate your income to the UK will then tax that income again in ways you would not have anticipated.
So Jonathan, so when you mentioned there from a US perspective, they look at an LLC because it's tax advantages. Just to clarify, those tax advantages would be if it was owned by a US individual.
Correct.
Yes.
Correct. Owned by somebody living in the US.
Somebody living in the US, yeah.
But if you're not living in the US, you really have to be careful. The other thing you have to think about is you might have somebody living in the US who wants to be an owner of your business, And they want it to be an LLC because they'll get better tax advantages. And that's what, Rob, you and I have done a number of deals like that, where we have to set up a system, of a multi-layered system, in order to give the US resident the tax benefits they want, but protect the UK owner from being punitively taxed. And I don't think we need to go into the details of that now, but suffice to say that if you are thinking of moving off the typical C corporation structure, you really need proper tax advice and legal advice.
Perfect. So I think something we were discussing about before the webinar kicked off was contracts. And I think a lot of people, sometimes from the UK, let's use a recruitment agency as an example. They're working with a US business situated in the UK. They want to start working on some US jobs, whether that's permanent or contract, and they end up using the same UK terms that they have giving to their other UK clients. Is that okay? And what are the problems that are going to arise if they don't adjust the terms of business that they have?
Well, it's the most common thing in the world that somebody moving to the US at first will just use the contracts that they have on hand. And that's absolutely fine. But that contract at the end of the day will not protect you in a dispute in America. There will be certain limitations of liability that are valid in the UK. There will be certain disclaimers of warranty. There will be other protections that are recognized under UK law, which will not be recognized under US law. Mm-hmm. Or they will be recognized, but they won't use the proper language for it to make them effective under US law. So, you know, if you do that, you are really running a risk. What I'd like to say first and foremost, though, is if you're not a recruiter, if you are a service person for selling goods, and if intellectual property plays any role at all in what you're doing, then you absolutely need to use US contracts from the outset. Okay. Because if you are granting a license, you really cannot enforce that license in the United States with a UK contract. You need a US contract to enforce that license. The other thing you might want to recognize is, well, two more things. The Supreme Court recently decided that US courts are not bound to apply the law of a foreign jurisdiction, even if that law is called for in a contract. The US court can decide that public policy decisions make the application of US law more well, preferable and justifiable. Secondly, how many US courts can adequately apply UK law? Chances are you'll have to sue in the United Kingdom. But there's no treaty between the two countries that requires a court of one country to enforce the findings of the other country. That goes for litigation in courts. That's got nothing to do with arbitration. Arbitration is a different matter.
Jonathan, quickly to interrupt, just so maybe to clarify for viewers, is from a US perspective, because most of these things from a contract will be under the state law level, correct?
Yes.
So when you're negotiating with, depending on what industry, and when you're negotiating, you really want to have that. If you're negotiating a US contract, you really want to have that agreement written up in the state, in the state's law that you're based in, because then it would be tried in your court. Whereas if you do it in the customer's court, you might have to travel across the country. And what I've seen sometimes is that if you end up dealing with multinationals, they might force your hand and say you've got to use our contract, which means you might have to go to California to ever contest it, even if you're based in New York. Is that correct?
That's absolutely right. That a lot of contracts try to use strategic advantage. So if they are contracting with somebody whom they know does not have a lot of resources, they will place the venue of dispute resolution far away from that person, knowing that that person probably doesn't have the resources to travel from Indiana to Washington D.C. for litigation, and thereby increase the chances of having a favorable settlement. Now, I would be wary of that with employment contracts. With employment contracts, you probably should use the law of the state where the employee resides, because those contracts will probably be interpreted in a light most favorable to the employee. But between two commercial enterprises of relatively equal bargaining power, you'll be stuck with the words of the contract.
Okay, and if someone is planning an expansion to the US, how far in advance should they be thinking about these things? Should it be 6 months ahead, a year ahead, or if?
Can I just jump in?
Please.
So very often when Jonathan and I will get on calls with clients, we'll very often get the thing is, the client is already down the road, so how should I set up for being most tax advantageous is normally the question. And Jonathan and I have to sort of say, well, let's wait on that, let's come back and look at it, what you need to do from a business perspective. And very often we get back from a business perspective, going back to our first comments is, who are you going to send over there? How do you want to do that? So very often we'll go back and say that before you started, if you're going to send something from the UK, the first port of call is to talk to an immigration solicitor, work out what options you've got, which may then in effect have an idea of, from the structure, how we need to do it to depend on what visa we want. And then I think it all progresses from there. But I would say in reality is you've got to be looking 6 to 9 months, even for that piece, before you even think of going there, because of the time it could take if you want to send somebody from here. And I think the other piece that we see, once again, not a tax or legal thing, is sometimes, like, for whatever reason, when people go to the States, they don't do as much due diligence or market research. So the sooner you can do all that work up front, the better. And to be honest, I've sort of worked with a client recently that sort of has been looking into the US for 18 months, 2 years before he's actually really pulled the trigger. And now he's on the exception on the far side. Jonathan and I have also got clients that most probably have spent 2 weeks, a month deciding if they're going to go there.
Yeah, that's right. Yeah, you and I have both agreed that homework costs nothing. And in terms of when you should start planning before you can pull the trigger, once you foresee a reasonable likelihood of doing any significant business in the United States, take an hour a week and talk to a professional. I mean, Rob and I are very used to talking to people, not on the clock, just to educate them. We spend a lot of time doing that, and without a doubt, those people who choose to educate themselves a bit earlier and do their homework stand in good stead.
Costs. How quickly can these accumulate? How can a company limit the costs early on? And I think people have said to me before, and I think you probably both agree, that if you're going to do the US, it's going to cost you money, and you need to be prepared for that from the beginning. So what should people be, mentally preparing themselves for?
I just want to throw one thing out before we talk about this. I think once again, I think Jonathan and I, from experience, we both agree is when you go into the US, you're either all in or all out. And what I mean by that is, I think if you're all out, it's most probably you're doing a bit like a distributor relationship, or in effect, if we're talking recruitment agencies, they're staying in the UK, but they're using a service like yours to help them with their business in the US. So they haven't really got any filings in the US themselves. Or you're the other way and you go, yes, I'm setting up an office there, I'm sending people there, I'm doing everything properly. Almost without fail, anybody in that middle twilight zone, from my experience, has almost always failed, or cost them a lot more, or taken a lot more time than they anticipated. So that's what I was just saying. And then in effect is, if you want to sort of get into sort of specific costs, I would just say it's difficult to put, in my mind, it's difficult to put a number on it. But very often if you've got your internal accounting or you're doing the finances, I would always say whatever you budget, double it. And however long you think you'll take, double it.
Okay.
And that's not, you wouldn't find that in any book or anything like that. That's just what we have found over the years.
Yeah, because you're trying to you're trying to manage your business, especially if you're an owner-managed business, you're managing this existing business while trying to set something up that's very complex in a new country.
People go to the United States for all different reasons, and they have many, many different business models. They have many different objectives. So on the low end, I have some clients who want to establish a U.S. corporation for the sole purpose of signing contracts with certain companies in America. Certain companies in America will not do business with you unless you have a U.S. entity. And so their presence in the U.S. is absolutely minimal. Well, that doesn't cost a whole lot. It costs a few $1,000, and it takes some maintenance. On the other hand, moving a step up from that, you have people who are perhaps sellers of goods. They're never going to send anybody to the United States. They're never going to have a sales representative in the United States. They're going to engage a distributor. So they may or may not want to establish a corporate entity in the United States. And then after that, they'll want to engage a distributor. That's also relatively limited. And just a word about distributors. For my clients who sell goods, the distributor is always the weakest link in the supply chain. It is always the most vulnerable, the most dangerous link in the supply chain. And you trust your distributor in the absence of a very comprehensive, detailed contract. You trust your distributor at your own peril. That is a common cause of serious problems in the United States for sellers of goods when they do not have a good distributor contract. And then moving on, once you can start sending people to the United States or having a lot of contractors or employees there, then the costs go up.
Some of that as well, John, is derived by the type of visa as well, isn't it? Because sometimes, depending on what type of visa you have, if you're sending somebody from here, you may have to be seen to actually put so much money as investment into the US. And that gets into a complex immigration, which I think you're most going to cover at a later date. But it is an addition, it depends, those sorts of things. So if people were there sort of thinking about this motorway, thinking, well, legal and accounting costs, there's sometimes a lot of other hidden costs that you could have in there as well based on other things you're doing.
That's right. Can we?
Yeah, absolutely.
You're going to likely spend more on your US contract than you will on a similar contract in the United Kingdom. And here's why. In the United Kingdom, and this will go on to some of the other things that we'll speak about, there's a fundamental difference in the way we resolve disputes in America and the way we resolve disputes.
Just to say, this is really important that people listen to this.
Okay. All of my UK clients are naturally and rightfully conditioned to thinking about commercial risk in a UK context. The problem is they're not aware that it's a UK context. So be proud, you have a very civilized legal system wherein you're unlikely to sue somebody unless you feel you have a very reasonable good chance of winning. And one of the reasons for that is the loser in commercial litigation does not have to pay the legal fees of the winner. So it's hard to find a lawyer to represent you unless the lawyer thinks you have a really good case. And that's not the case in America. In America, the decision was made many, many years ago to give people more access to the courts in order to facilitate that and to decide that, well, on a state level, certainly, that the loser in commercial litigation would not have to pay the legal fees to win. And that has profound implications for assessing the financial fallout of a dispute in America. What you're looking at is a situation not so much of who's going to win, who's going to lose, but rather who has more leverage in settlement negotiations. If you are an attractive target, if you have left yourself open to a lot of claims, then you will likely be drawn into a dispute more easily. If, however, you have conducted your affairs reasonably diligently, reasonably thoroughly, and have a good paper trail and documentary evidence, then the American system will very much work for you. So the American system of dispute resolution is not nearly as uncivilized as people think. It's just a different set of risks, and it very much rewards diligent, organized record keeping and comprehensive contracts. So our contracts are designed to minimize as much as possible areas for misunderstanding and dispute, and that's why they're longer. Okay. It can an average UK business owner can find them a little bit intimidating, but they pay for themselves thousands of times over, literally thousands of times over.
Yeah. So. Perfect. Just moving on to the next slide here. So really, I guess the question to both of you here is, UK European businesses going to the US, what are the pitfalls, the most common pitfalls that people fall into? And then leading on to how can people minimize that risk early on to potentially not even fall into that? We've got a couple of points here if you want to go anything on any of these points.
Yeah, I suppose the things that I see from, once again, a lot of the things what Jonathan and I talk about, a lot of business things, obviously there's tax pitfalls that most where you don't register in all the states you may be doing business, and then we can talk a little bit more about that, tax nexus. So you can always get sort of penalties from that perspective. But some of the things that are more likely that from a business perspective is sort of that I think people going from the UK to the US, because the US culture is very welcoming. For whatever reason, people have a false sense of security and a false sense of success in the US before they go there.
Okay.
And what I mean by that is we'll have a lot of clients that I've talked to over the years, and they might have 5 people they're talking to here on a deal, and 20 people and 50 people in the States might talk to them, and they say, well, I've got this 50 there. I go, yes, but those 50 might only convert into the same 5, might only convert into the 2. Americans in general are far more willing to talk to you up front, whereas I think most of the times in the UK, most people have already decided to a degree whether they're going to buy or not.
Okay.
So you don't get as much sort of wasted time. So there's this false sense of security. And then I think this false sense of security leads into other things that can cause you some problems in the US.
Sorry, go on.
Yeah. Which I think is along the lines of sort of, because you feel secure there, like I mentioned, we don't maybe do as much market research, maybe don't do as much due diligence because you're meant to feel so welcome that you think, oh, well, I wouldn't get, if I went from London to Birmingham, I wouldn't get this reception. So when I do that, you're almost more cautious than if you go from London to New York, or definitely London to the Midwest, but the culture there is very welcoming. So you've just got to be very careful of those sorts of things.
And I think just on this point to expand slightly more is the US is a huge country. And we were speaking before the webinar started about how people can also think that getting in the US, getting through the door basically means they've opened up the whole country. You were kind of explaining that that's not really the case, that they may only be able to really deal with their local market companies in other states, may not really be dealing with them. So how can people really potentially mitigate that or just prepare for that?
Well, I think from a UK perspective, when I went to the US to start with, I thought to myself, everybody's been to Grand Canyon, they've been to Disney, they've been to Yellowstone, all those places, and people don't. They might have been to some of them, they might not have been out of the state, they might not have been out of the country. And vice versa, I think everybody in the US thinks everybody's been all around Europe, and you haven't. So there's this misconception. So I think when we go to the US as a business, we look at it as being America, as opposed to really looking at it as being 50 different countries within a large landmass. And I think to be successful, you've just got to know where you want to be and most really concentrate locally, because any local businesses that maybe Jonathan and I have dealt with over our lifetimes in the US would maybe at a maximum ever be trading for owner managed businesses in maybe 2 or 3 states on a big basis. They might have a contract somewhere else, but they would focus in the local marketplace. And I think a lot of British businesses that go there maybe miss that. And I think I would caution to that is don't look to conquer the US at one time. The other thing from a tax perspective you've got to be careful of, we mentioned very briefly this tax nexus. So when you go to the US from an accounting and tax perspective is you will set up your entity, you will pay federal tax, which would be the equivalent of you filing your CT 600 and corporation tax here. What you then have to look at is then, depending on the amount of business or the type of business you're doing in different states, you potentially can create this tax nexus, which is a taxable presence in those states. So you could end up having a head office in New York or a head office in Cleveland, Ohio, whatever, but have employees in different parts of the country. That will potentially give you a taxable presence in those other states as well.
Okay. While we're actually on that, tax nexus, permanent establishment, what's the difference?
The difference is it gives you mostly the same answer to different concepts. So when people start talking about permanent establishment, they're talking about whether you've got a taxable presence at the federal level. And where this would normally come into play is if you've got your UK company that is doing some business in the US. So for example, you've got a recruiter who's using your services in the US for their temporary contractors. They being a UK company, doesn't really have any presence in the US, so they haven't created a permanent establishment. So that means they don't have any federal taxable presence in the US. If in effect is the UK company goes to the US and actually sets up a branch office in the US where they've got a physical presence there, they've mostly created themselves a permanent establishment because they've now got a physical presence there and now subject to US federal tax.
Okay, so if as just to expand on that slightly, if I'm selling a service business and I'm based in New York State but selling services in Massachusetts, at a certain point a tax nexus would be created because a lot of revenue would have been derived from that potentially, but not a permanent establishment unless I set up a branch or office or have.
Well, I think the permanent establishment is sort of, if you look at the system as, first of all, you've sort of got to be in the US. So your permanent establishment would be your UK company going there, and permanent establishment is more of a federal tax concept, which the permanent establishment comes up and it's covered in the income tax treaty between the UK and the US. Tax nexus is a state concept, which is sort of tax nexus isn't actually covered under the treaty. So you can be in a situation where you have a UK company going to the US. It will get treaty benefits at a federal level, but the states don't follow the treaty. So you might not have a permanent establishment under the treaty because you don't have enough business going on there.
Okay.
But potentially, you could pay tax at a state level, depending on what you're doing in the state, because what you've done there has created a tax nexus, which isn't covered by the treaty. So it is very important to understand the difference between a permanent establishment taxability concept and a state tax nexus concept. Yeah.
So viewers should probably think, if I'm generating revenue in the US, I should speak to Rob, because it sounds pretty complex.
Yeah, you should. Yeah, you don't want to do any more here. That's why I said with this. Yeah.
Jonathan, over to you. Anything that you would kind of expand on pitfalls?
Yeah. Well, we mentioned two of them already. One is, for instance, not knowing very well or not having well-educated the people in the United States upon whom you're going to rely. The quality of those relationships can have consequences if they're not good. And secondly is underestimating the difference in commercial risk in contracts. That's a huge one. To that, I would add, we get conditioned to the practical aspects of running our own business here in the UK, in the UK context. You really have to try to relinquish all of your assumptions when you go over to the United States, understand that it's a different country, and then go about the rather dull and detailed work of recreating those operations in the United States to see how they will pan out. I'm really, really happy to say that most of my clients have succeeded. The vast majority have succeeded there, but I'm thinking of one in particular who simply didn't go that extra level to see can I provide this service in the same context in America, and they didn't go that extra level to I don't want to talk about it too much, but to walk through the entire process.
Okay.
They stopped short of walking through the entire process, not knowing that there was a regulation, a private regulation of a company that prevented them ultimately from doing what they wanted to do after all that work. And so the way I would say is, do not rely on your theoretical transference of the company to America. Really make it quite practical.
Okay.
Go through this.
Walk through every
work, the detail. Go over there. If you need to talk with people or see how various properties work or how companies work, go over there and go through the process.
Yeah. Companies that make mistakes, do something wrong in the US, whether they, and I guess this branches off into two things. If I have a UK entity and I'm doing business in the US, providing a service, and I make a mistake, fall foul of federal or state compliance requirements, how am I liable as a UK business? I have no presence in the US. Who's going to come after me, and what's my liability? Number one, and then the same for I'm established in the US and I have a corporation.
Well, okay, if you are a UK company trading in the US, and you conduct a wrongful act, a criminally wrongful act, well, then that's a different matter. That's no longer, that's a different truth, and one that I'm probably not that well qualified.
I'm sure none of our views.
I don't do criminal law. I don't do international criminal. Stepping back from that, though, to be found liable, it's perfectly, anybody can sue in the United States, and if they have a decent case, they can win. That's not the issue. The issue is, can they recover judgment against you?
Yeah.
In order to do that, for the most part, they would have to get the judgment in the United States, come over to Britain, and ask a British court to enforce the judgment. It would be up to the British court whether they wish to or not, and they could look at the case afresh. They could relitigate it. So, in a sense, you have the benefit of an ocean between you and the United States. But on the other hand, you don't want a default judgment against you in the United States, because then once you you do travel to the United States, will you be held in contempt of court? Possibly. If you try to open a business in the United States, could they levy assets of that business? Possibly. If you had been held in contempt of court, you'd probably lose the corporate protections that you have, and the shareholder of the corporation might become liable. So
it's a bad idea. If you've got long-term goals or objectives for the US, it's a bad idea.
It's a very bad idea.
Anything. Yeah.
It's a very bad idea, and there's simply so many things you can do to resolve disputes.
Okay.
Lawyers in American, plaintiffs in America, for the most part, you can be reasonable with them up to a point.
But I think once again, with a lot of these things, I'm not sure, it certainly is from a tax and accounting perspective, and I'm not sure from a legal perspective, but you can never ask too many questions. So what I sort of say when people ask me, how do you understand UK and US tax law? You say, well, I learned UK to start with, and you've got all the concepts there, and you apply the concepts in the US, but you know the rules are different. So if you know there's something going on in your business here, based on my practical experience, that you would ask a question here, you most well need to ask the same question in the States. You might get a slightly different answer.
That's correct.
But conceptually, doing business in the UK and the US, conceptually, I believe, is fairly similar, except the rules are different.
And that is where we run into one of the biggest pitfalls, if I could sum it up this way. The business, the expectations of what's reasonable and not reasonable in business in the United States and in Britain are almost identical. And that lures you into a false sense of security, because for historical, geographical, and political reasons, we take different legal courses to that same shared place of what's fair and reasonable.
Okay.
And in a lot of commercial law, if you're not on the right path, i.e., if you haven't used the right words in your contract or you haven't done the right things, then regardless of your intentions, you won't be protected. So you get lulled into a false sense of security by the fact that we are so similar, whereas legally and in terms of taxes, we aren't at all.
Okay. Good. I think we've got time now to just open up questions. So, Charles, do you want to just read out any questions that have come in?
Yeah, sure. So we've had a couple of questions in. The first being, can a tax nexus be created without us having a PE?
Yes,
it can actually, but only if you are a UK business that is doing business in the US without a separate legal entity. So we do have some clients that have done things like, I suppose, conferences in the US, where at a federal level, we've been able to say they weren't in a fixed place because they were at a conference center. But at a state level, the state says, you've been here in our state and you've been generating revenue from your conference, and thus you are taxed on it at the state level. Now, on the flip side, just to take that one step further, so because the taxes you would pay at the state level are an income tax, those taxes you pay there will get credited against your UK corporation tax liability. So hopefully your combined state rate in the US is less than the 19% in the UK. So it should be a zero net cost to the business, but it'll just be who you pay the tax to.
Okay.
Thank you. Next question is, if a US branch of a company is seen as a separate entity from the UK branch, must profits stay in the US? If not, what are the implications for profits being transferred back to the UK?
So from a tax perspective, if you've got a branch in the US, that's not unless Jonathan corrects me, that's not a separate legal entity. It's an extension of your UK company. So from a US perspective, is when you make the profit in the branch in the US, you'll get taxed in the US on that. Those same profits will be taxed in the UK, and you'll get a credit for the taxes you paid in the US, so hopefully there isn't double tax. And under the treaty, as long as it's structured correctly, when you bring any actual monies back from the US to the UK, there'll be no tax implications.
Great, thank you. And another question is, what's the exposure for UK companies dealing directly with American LLCs or similar corporations?
The exposure for the UK company?
Yeah.
Is simply that a claim can be made against them. And they can be brought to trial based upon that claim. You then ask the question of whether they're judgment proof, and we come around to that very same discussion we had just a moment ago. if a claim is made against them and in court they're found to be liable, then they may or may not consider themselves to be judgment proof. They may or may not pay, and they'll have to go through the calculation of whether it makes sense to have a judgment remain against them in the United States with all that implies for their future business. I think, as we said before, it's not a good idea to leave a bad trail behind yourself.
Right. Another one is, what are the popular states to set up in from a legal/tax perspective for a UK recruitment business looking to open in the US?
That's to incorporate the entity in.
I believe so.
Yeah.
I'd like
do you want to quash the myth, or just like?
Well, I'd like to hand it off. This is another area where tax and law combine, and there's a lot of myth around it, as though there's a yellow brick road that leads to Delaware. Yeah. And it is not the Emerald City, but it is appropriate for some companies. And then there's also a myth about income tax and all the rest. Why don't you talk about that? Then I'll take the legal.
So I think the myth has always been out there that people hear about setting up in Delaware because there's no tax there, which sort of is and isn't true sort of thing. Delaware, as John says, is a very good state to set up good corporate laws, good protection, and for a lot of our clients, for reasons I won't get into, sort of makes sense to go there. However, to worry about where you pay state tax is where you're actually conducting business. So if you set up in Delaware and you have an office and you just set up in Delaware and then you register your business in New York and you have your office in New York and that, you'll just pay New York tax on all your income. So from a tax perspective, it doesn't make a lot of difference. So if you did want to set up and have your office in a state that didn't have an income tax, like Washington doesn't have an income tax, Nevada doesn't have an income tax, Ohio doesn't have an income tax, and there's one or two other states that don't have a state income tax, but you need to have your people there to get those benefits, and that's where you need to be operating.
So if you're not going to be in one of those states and you're in a higher, or any kind of higher tax area, you would potentially incorporate in Delaware to make use of the corporate law structure, but then you'd be paying the taxes in the state where you have your physical operations.
Correct, basically, yeah.
But Rob has discussed the tax aspects. Then that leaves the legal aspects. And in the world of the legal aspects, there's commercial law, that's the law of contracts and transactions, as well as corporate law, which is the law of how a corporation is maintained, structured, and governed. Delaware has absolutely no benefit with regard to commercial law. It's like a lot of other countries, a lot of other states. But with regard to corporate law, it does stand alone in the United States. A long time ago, Delaware decided to attract corporations from all over the United States through a number of different means. And over that time, almost every corporate issue that could be litigated has been litigated in Delaware. And as a result of that, Delaware has an extremely advanced and sophisticated body of corporate law. In fact, it is so sophisticated and advanced that the US Supreme Court very often defers to findings of the Delaware Business Court in rendering its own opinions. Does that make a difference for most of our clients? Absolutely not. It makes a difference for clients who are very, very big. So multinationals or national-sized companies will incorporate in Delaware. Again, not for commercial reasons, for corporate reasons. I incorporate clients in Delaware under a limited number of circumstances. If they have an exit plan, meaning are they building up this business in order to sell it? Or are they coming into the United States and they plan to attract equity investors? Under those two circumstances, the corporate law of Delaware might make the ultimate purchaser of the business or the investor of the business a wee bit more comfortable. Mm-hmm. It won't get them a higher price, but it might make the transaction run more smoothly. Most corporate lawyers throughout the country all know what Delaware law is. Most of them don't know what Montana law is.
And I think I just want to add one thing onto that. The clients that we deal with, so Jonathan and I would agree that if you were living in the US and you lived in Ohio or you lived in Massachusetts, whatever, you were doing business there, you would set up and incorporate in that state because you are going to be there all the time. That's where your family are, you're not going to move. The reason Jonathan and I, most when we've got clients going from the UK to the US, lean towards Delaware is very often our clients don't know 100% for sure which state they will always be in. if you know you're going to be in New York always, and always have an office there, we most both agree to incorporate in New York. The reason we don't is we've had several clients over the years that said, yeah, I want to go to New York. They go there, it doesn't work out, they then go to California. It is easier to then use Delaware as like your anchor, and then just move to register in a different state. Because if you register in New York or incorporate in New York and go to California for income tax purposes, you will always have to continue filing a New York return as well as California.
So, question then: if I've incorporated in New York and I go to California, how can I, if it's possible, change the location of incorporation to California? Is it possible to change?
Yeah. What we'll see sometimes is you would set up a new corporation in California, and for tax purposes, you just merge the New York corporation out of existence into the California one. For tax purposes, it's a zero transaction. There's mostly a little bit more hoops to jump to from a legal perspective, but from tax and accounting, it's a zero transaction.
Yeah. Which is another reason to incorporate in Delaware if you don't know where you want to be, because the merger and then extinguishment of the Delaware corporation is much easier. Some other states, you have to go through a number of different levels before you can terminate the corporate existence.
Charles?
Yes, we've got just a couple of more, just in the interest of time to whip through. So another one is, I'm interested, how much does it actually cost to set up an incorporation in the US? I've heard a few years ago that you had to top deposit a certain amount of funds and provide jobs for a certain amount of Americans. Is this correct or no?
I think that might be referenced perhaps to the E2 visa.
I don't think so, no. The E2 visa, you have to have a corporation in America and then you have to invest. It's not a quantifiable amount. It's you have to put, of your own assets, you have to put a substantial portion at risk. So the US government knows that you are serious. What you're talking about is to gain state tax advantages. So if the state is going to give you some tax incentives, then you have to be giving some jobs to the state. And that's a completely different matter from incorporating. Incorporating is simply filing to get the paper for incorporation. It's a simple matter. It takes a day or two. It doesn't cost a lot. And the result of doing that is that you will have just enough tools to get yourself into a bunch of trouble and not nearly enough education to get yourself out. So to ask the question, how much does it cost to incorporate, it can be a question that can be answered, but it doesn't give a lot of information.
I suppose if you were going to the US and incorporating properly and having the proper accounting, legal advice and paying the appropriate people to do that, you're always going to be spending at least 10, 20 grand on it.
Okay. Well, I think a lot of that is with your commercial contracts as well.
Yeah, that's what I mean.
Yeah. I think if you're going to have a presence in the United States, you're going to be employed. You're going to be signing contracts with your clients or customers, as well as intercompany agreements. You have to be looking at least 10,000.
Can I just want to ask a question, just because I know this comes up so much. Rob, it's probably directed to you here, because I've sent many people asking this question. The W-8-Ben form, what is it? When is it used? Is it easy to do? Do I need a professional to do this for me? Just if you could.
So the W-8-Ben form, for anybody who's seen one, is about an 8-page document with about 50 questions on it. And if you fill it out correctly, you must have to check about 5 boxes, but it's overwhelming. So when you'll most get a W-8-Ben is when, because what happened was certain rules came into the US about 5-6 years ago that put a lot of strain on US businesses to make sure that if they were paying monies to overseas companies, that in the event that an overseas company had a presence in the US, they were worried they wouldn't get their money from those services or provided. So it was on the payor, so the US customer, to withhold 30% on monies being paid offshore, unless you're able to provide documentation to show that you didn't perform those services in the US. And if you don't perform those services in the US has no right to tax them.
Okay.
So what maybe, if we've got recruiters on the line here, they might be placing somebody in the US. And if it's a big multinational, it tends to be where you've got more sophisticated tax departments or sophisticated companies. They might say that as part of signing you up, if you don't fill out this W-8-Ben form, we're going to withhold 30%. Now, you can always file a return to get it back, but the easiest thing is you submit this W-8-Ben form, basically explains to them that all the services you're providing are based in the UK, and you sign it and send it to them, and then that satisfies them that they're able to pay you gross.
Yeah, and then there's 50 questions. People probably don't know which ones to answer. Is it a good idea to come to yourself?
It's mostly a good idea to come to me or somebody. I wouldn't recommend Googling, but when you understand the form, it all makes sense. On the first page, if anybody's seen it, there's literally about 30 boxes you can check to try and signify what type of entity you are. Okay. Most of the companies we deal with are owner-managed active trade or businesses in the UK would in effect check the box and say they're an active, not a non-financial foreign entity.
Yeah.
Which is, I think, the 6 box up from the right-hand side, and then you check box 39, I think, saying that you're active trade or business. If you fill out the first form of that, check that, and check the box to sign it, you're mostly going to be fine.
Perfect. I think we've probably got time for 1 or 2 more questions if we answer quick, and then we'll wrap it up. So, Charles.
I think, just along those lines, quickly, is a UK recruitment company liable if a contractor is working for an LLC that is incorrectly classified?
As in, are we talking about misclassification here?
So just to clarify, in this case, the UK recruitment company would have sourced the contractor for the US LLC.
And so the contractor, are they a W-2 and LLC? Can you just read the question once?
It just says, it doesn't specify whether or not it's a W-2, but if we just say it's a W-2 and it's a UK company has sourced that worker for the US LLC, but that LLC is incorrectly
I don't know if that would.
I think personally, I'm going to sort of push it and say that if somebody's got that specific question, it mostly needs to just be directed to Jonathan and I separately, because there's lots of facets going on there. And it's mostly a question that can't really be put down in writing.
You can't answer that question in the abstract.
Sure.
There will be too many aspects to that question which will bear upon the answer. The one clear answer is, if you think that there's a misclassification problem, you need to speak with somebody.
Yeah, sure.
This is a serious issue.
And just one final question that we're trying to wrap up is, if we place a candidate into a New York business, but all of the work has been done in the UK, does that create any tax implications?
Once again, I suppose it's who does the employee, whose books are they sitting on?
Yeah, so I presume that situation, what's happening is there's a US business, let's use Barclays Bank, based in New York, that have used a UK recruitment agency to find a contractor, that the contractor is also situated in the UK, probably working through their own limited company or umbrella company, being paid from the UK. So the only tax implication would be when the UK business invoices the US business for the services or for the fees.
If let's try and maybe summarize it. So if the contractor who's doing the work is truly an independent contractor, whether they're working out the UK or the US, then my understanding would be the recruitment agency would be just, in a sense, getting their fee.
Yeah.
And that fee would be based on what they were doing in the UK. So I don't believe they'd have any exposure to US tax because they provided the services in the UK. And what the independent contractor is doing is up to the independent contractor, as long as they are classified correctly.
Yeah. Perfect. Okay, so just to wrap up, perfect. So we've got our contact details. There's Jonathan, Rob's details. Feel free to get in touch with them, send across any questions. I'm sure they'll be willing to speak to you. Just want to say thank you to Jonathan and Rob for being here today and taking part in our webinar series, Setting Up in America. Just to let you know, we've got the next webinar on the 20th of Feb, which is going to be focused on immigration. So a few of the different questions that came up today about T2 visas or transferring internal employees to an existing US corporation, we can answer all those kind of questions. And we'll be sending out some emails in the next couple of weeks just alerting you with that. But Jonathan or Rob, if you wanted to add anything.
I've written a number of articles about what we have discussed today. And if anybody would like to read them, just send me an email and I'll be more than happy to send you links to those articles. The only other thing I would write is make sure in America, if you have a corporation, that you do all your annual filings. I have too many companies that don't do that.
Okay.
Your annual minutes, if you have a question about that, feel free to call.
Okay.
I think from my perspective, I just reiterate that if you want to be really successful in the States, you're either all in or all out. Don't go somewhere in the middle, because without fail, you'll spend a lot of money, take a lot of extra time, and get very frustrated.
And probably take on some risk.
And take on some risk.
Excellent. So thank you everyone for attending today. If there's any questions that we weren't able to answer, please feel free to send them through, and we'll either get Rob and Jonathan to just put a summary together and come back to you on those questions. And the video will be made available online.